Hello, it's Brad, Laurie, or BlockchainBrad, and today, once again, I'm speaking with Anthony Pompliano. He doesn't need any more introduction. He is well known right throughout the blockchain and crypto space. Mate, thank you very much for making time to do part 2 of this interview.
Yeah, for sure. Thanks so much for having me.
No worries, mate. Now, I know I'm on a timer right now. You are busy, so I've got 30 minutes to get through what are some really important questions for the audience. This is entirely free. There's certainly no underhanded, intentions other than providing truth, transparency, and trust on the blockchain right here with Pomp. Now, mate, I wanted to start off with a quote from your mate, Eric Voorhees. He's a strong proponent of Bitcoin. Now, recently he tweeted out something and he said, if you say everything other than Bitcoin is a shitcoin, then that's toxic tribalism. And he also tweeted something even more recently and said, some coins are vastly valuable, but most are not. So he alluded to the point that some are even beyond Bitcoin. So what are your thoughts on that, Pomp, given that some, even in the early days that support Bitcoin are moving on beyond just this myopic maximalist narrative?
Yeah, I think there's two components to this. So the first is you've got to understand what makes a currency dominant, and that's a network effect. Money is a belief system, and so in the currency specifically, it's really important whoever gets a network effect first usually will win, and it's very much a kind of winner take all or winner take most market. So I think that's kind of in the currency vertical. Outside of the currency vertical, of course, there's going to be things that are valuable, right? I think that's the kind of the challenge that most investors have is figuring out what's real and what's not. To date, I think most of it has probably been not valuable, but that's very similar to other evolutions of technology. If you go back to a lot of those early internet companies, right? A great example would be the search engines, right? Obviously, there was 20-something of them before Google came along. Google ended up being the dominant one, et cetera. So I think you've got to separate out currencies from everything else because currencies actually network effect is really, really hard to unseat. But with everything else, then it comes down to what's valuable and what's not.
Right, and that's interesting you say that, Pomp, because obviously there are different classifications of assets today, and you speak about these obviously also representing a hedge fund. You're well aware of some of the potential of these industries moving forward. So are you a supporter of DeFi, for example, or some of the things that are really starting to showcase their value beyond those other challenges to cryptocurrency, as you mentioned?
Yeah, so I wrote something about this back on November 4th, actually, where I said, why isn't DeFi coming to Bitcoin? And the reason, or kind of the framework I used was, it's pretty well established that Bitcoin is money, right? It serves as a store of value. It serves as a medium of exchange, but there's not a lot of decentralized infrastructure around that providing financial services. Most of the things that you can do with Bitcoin are all centralized companies, right? That doesn't make them bad. It's just they're not decentralized applications. If you go over to the Ethereum and Ether kind of ecosystem, the infrastructure is decentralized, right? So you see this with things like Maker and kind of all of the DeFi type products, but the asset itself, Ether, has not been proven to be money yet, right? And so people are trying to use it as money, but it hasn't been proven. So you kind of have this mismatch where on one side of the equation, the Bitcoin ecosystem, you have the asset already validated and proven. On the other side of the equation, you've got the infrastructure having been validated. And so how do you put those two things together? That's this idea of bringing DeFi to Bitcoin. Luckily, after I wrote that, I had a bunch of companies kind of reach out to me and come inbound and say, look, we are working on this. And so I think you'll start to see a lot of the things that are available today in the Ethereum ecosystem built out for Bitcoin over time. But I think that the kind of takeaway from this is, a lot of the things that people are working on are actually really good ideas. My guess is that they're just too early, right? So what we'll see is just like with the internet, Chewy is just pets.com 15 years later. Right. So I think that you saw all the ideas that are now the Spotify's of the world, ride sharing, food delivery, all that stuff that now today we're like, duh, of course we're going to have that. People tried that in the late 90s, but it was just too early, right? The infrastructure wasn't there, the connectivity wasn't there, the devices weren't good enough, etc. And so I think that similar things happening here where all of these ideas 15 years from now, we're going to see them come back and probably be successful. But it's important that people try them today.
And what's interesting also is that there is this suggestion that DeFi is quite agnostic, in terms of a term, Pomp, rather than be specific to even the Ethereum ecosystem. And even today, MakerDAO, for example, there were comments and remarks made on Twitter to that effect. to acknowledge that DeFi is a movement. And that aligns also from what you're saying. Now, later we'll talk about the potential for Bitcoin in terms of what it can actually do in terms of development and building on its network and on its layer one. But I wanted to ask you a bit more about the social aspects as well. We touched on this last time, but recently we had Stefan Livera and Richard Hart go at it, as you would have known. And one of the points both agreed on, though, was that there is a social aspect to Bitcoin. There's a social layer of consensus, as Stefan put it. So what are your thoughts on the importance and imperative of the socially driven component of the ecosystem?
Yeah, again, people don't really like to think about it this way, but money is a belief system. The reason why when I hand you a US dollar, you accept it and give me goods or service in exchange is because we both believe it has value. But why do we believe that? It's because somebody else, right, the US government and others that are in the marketplace told us it had value. And so what I think you see is this social construct or agreement or kind of social layer, whatever you want to call it. Everyone is buying into, hey, this thing has value. Now, why people will think that can vary. So some people like it because it has scarcity. Some people like it because there's a verification, not a trust factor to it, or a trust minimized or trustless aspect. Some people like it because it's secure, right? All these different things. But at the end of the day, there's social agreement that this is money and we trust it and we can use it as that medium of exchange. Now, that is also in line with what I call more the ethos-driven social consensus, which is Bitcoin. When you talk to somebody who has a propensity or is super excited about it, they come from a very similar mindset as other people in the ecosystem, right? So these are things around personal liberties, freedom, privacy, the decentralized nature, like all of these things. And so a great kind of manifestation of this is what Jack Dorsey recently did, where he's talking about now creating a decentralized protocol for social media, right? And so what he's basically doing is he's taking the ethos of what has been applied in Bitcoin, and he's now porting it over and saying, well, what happens if we do this for communication and social media, et cetera? And so I think that social consensus or that ethos-driven approach and agreement is really important, because at the end of the day, you can't kill ideas, right? Technology could fail, a bunch of stuff could happen, but at the kind of idea phase, it's something that's intangible, and that makes it really, really powerful over time.
Right. So clearly ideologies do matter, ideals matter. And again, that social vision and collective vision is important according to what you're saying. Now, Pomp, let's talk about this idea of money, because...
Hey, man, say hi to Joe. Joe just walked in.
Hey, how you going, Joe? Nice to meet you, mate. So... So, mate, in terms of Bitcoin being money, let's talk about that, because it's something that you do talk about, passionately. But right now, some would rightly argue there's not a great deal of, empirical evidence in terms of the overall scheme of things with regard to Bitcoin being money today. So one of the things you talk about is store of value a lot. We talk about unit of exchange a lot, but we don't talk a lot about unit of account as well in that sort of construct of money. So can you tell us a bit more about, why you're so steadfast on this idea right now today that Bitcoin is money?
Yeah, because people are using it that way. Like part of what I think I personally believe that maybe gets missed in the marketplace a lot is I don't care what my opinion is. My opinion, it really doesn't matter, right? What I look at is what is the market deciding? So why do I say Bitcoin is the most valuable thing in the marketplace? Because the market has determined that, right? It has the highest market cap. So the market has determined this is the most valuable thing. That's not my opinion, that's the market's opinion. Now, when you look at is Bitcoin money or not, well, the market has determined that it is money, right? It is being used more than anything else in the marketplace to transact value between two parties. And so when you look at that, the reason why that's important is that on-chain transaction volume ends up being more than Apple Pay's volume last year, Venmo's volume last year, or PayPal's volume last year. And so it's not what's my opinion or what's somebody else's opinion, whether on Twitter or an investor or an entrepreneur or whatever. It's just this is what the market is doing, right? And so it's a data-driven approach to evaluating it. And so I think where crypto kind of gets caught up a lot is like, well, what are those people doing with their money? Right? Like, why are they transacting it? Is it actually P2P, or is it they're just a business moving it or whatever? It doesn't really matter, right? Because we don't say, hey, JP Morgan processed, X billions of dollars a day in transaction volume. Oh, well, half of that doesn't count because that was just JP Morgan moving their money. right? No, we talk about here's what the actual volume is. And so for me, like this idea of like, why is Bitcoin money? It's money because the market has determined it's money, right? People are storing their wealth there and they're using it as a medium of exchange. And so whether we like it or not, they're using it as money. And until that changes, that's going to be what the facts are. Now, could that change? Of course, anything can happen, right? But I think that the way that currencies are adopted is that network effect is really, really hard to reverse or unseat. And so what we're seeing is a continuation of the network effect. And it's very likely that Bitcoin will continue to be money because of the network effect and the fact that people are using it as money.
Right, and it harks back to that social aspect as well when you talk about network effects. Now, one of the things we do notice, though, Pomp, is that there isn't a great deal of merchant adoption or merchant applications for Bitcoin today. There's still relatively small opportunities for us to go and spend in that context. We also see that things like the issue of it being priced in USD, no doubt that's not something that you would be a fan of long term, but right now that is the reality. And we still see the scenario where there's still arguably a degree of wealth disparity when you do the full analysis of a few holding a lot. Does any of these things concern you with regard to the development for money, so that we have this sound money evolution? Because right now there are some arguments to suggest that there's a few things stifling this.
Yeah, look, it's the exact same adoption curve that gold as money, the dollar as money, etc., all occurred, right? So if you go back, it was really hard for merchants to accept gold at first. How do you actually weigh what it is? How do you know it's real and it's not a counterfeit? How do you store it, right? All these problems thousands of years ago, that was a problem with gold. Then when we got physical dollars, meaning that there are paper claims on the gold, well, the first merchant said, why would I take that? I want your gold. I don't want the paper claim on the gold, right? And so then we got to fiat, right? And then there was a bunch of concerns around, well, why would I take the money that's not backed by the gold? And so as you see through time, the merchants are always weary of doing something new for the most part, right? They're not early adopters. It's because they're running a business. They look at risk management, etc. The encouraging part is that we're seeing more and more people. If you look at like a BitPay or somebody like that, they're signing up more customers. So that they're slowly making progress, but that progress is actually pretty material, right? Here in the United States, we had a state that would accept business payments through with Bitcoin. Pretty big deal, right? The fact that there's multiple professional sports teams that are taking it or willing to accept it. Now, again, even Mark Cuban recently on Twitter said there's been 5 transactions at the Dallas Mavericks, his NBA team, that people have used to buy Bitcoin with. Okay, that's 5. That sounds horrible, right? Why are there only 5? Well, it's because people are not incentivized to spend Bitcoin, right? Right now, there's actually a flip from the consumerism mindset or the consumption mindset to a savings mindset. And so I think that's really important at that layer 0, if you will, or layer 1. As we build more and more layers up, then I think that's where you'll start to see it. And the last point I'll make here is people love to say but I don't use Bitcoin to buy my coffee. Well, you don't use dollars either for the most part. Majority of Americans specifically are using credit to buy that coffee. They're not using dollars. And so then they wait till the end of the month and they pay off their credit card. And so if you think about kind of final settlement of that purchase of the coffee, it actually is multiple days before they end up paying for that coffee with their actual dollars.
Right, and Pomp, that's a perfect segue. I want to ask you about this coffee statement because you've made this before. But if we talk about that idea of credit, just to jump in, because still, even with that credit, there's a monetary system backing that, Pomp, and that is the US dollar, even though it may be delayed with credit. So do you feel that Bitcoin should be used for coffee at some stage?
I think the same system is going to get built, right? So you've got a layer 1 is equivalent to what gold was, right? So you had gold, then you had paper claims on gold as layer 2, then you had the kind of digital or electronic dollars that the bank was using, and then you had credit built on top of that. So there's kind of 4 or 5 layers that get built on top of gold as that layer 1. Same thing's happening in Bitcoin. We're just really, really early. So you've got Bitcoin as the on-chain kind of foundation. Then you're going to get kind of Lightning Network and things like that. You'll eventually get credit and all this other stuff that goes on top of it. But this stuff takes a really long time. We're talking about gold being 5,000 years old. We're talking about Bitcoin being 11 years old, right? So it's just, I think a lot about this idea that money to be successful, money is going to take hundreds, if not thousands of years to become what it should be on a global basis. But everyone wants to look at it with a 12-month mindset.
Yeah, you're
right? And
right.
so you
I mean,
can't take a 12-month mindset for something that's going to take, 50, 100 or more years.
right, and it's interesting because Richard Hart makes the point, and he's very controversial in the space, but has some interesting and valid points, to be fair. But he makes the point that this particular space of technology is fast-paced, and in fact, a 10-year period time span is really quite significant. So, do you think that it's a fair call, given that we're doing so much innovation, we're proving that the use case of blockchain in many different arenas, that a 50-year time span is sufficient?
Yeah, so I don't know who that guy is. What was the name?
His name is Richard Hart. He's currently advocating for his own coin, but he makes a lot of comments about Bitcoin and was one of the the predominant Bitcoin maximalists actually, but has switched into assessing the value of other coins as well. So he's moved into the arena of advocating for more than just Bitcoin. So in that sense, what he's saying is, when we talk about use cases, when we talk about the potential of Bitcoin, he's also saying that there's a lot more to the ecosystem beyond it.
Yeah, I mean, again, I can't speak to whoever that guy is, but in terms of where value is, right? Our core investment thesis, two of them at least, is one, every stock, bond, currency, commodity will be digitized over time, and two is that people will trust algorithms and software over other humans. And so, obviously, Bitcoin is a great example where people are trusting a monetary policy driven by algorithms and software rather than a human-led monetary policy. That kind of showcases itself with Bitcoin, that people are beginning to trust that. But there's other things that will be quote unquote digitized. But it really comes back to this idea of triple entry accounting, right? So the word blockchain itself has become this really dirty word. And so I always back up and say, well, what is a blockchain? A blockchain is simply triple entry accounting. And if you go all the way back before double entry accounting with single entry accounting, double entry accounting is created, the Medicis discovered, and they popularized it at their bank. And basically what that did is it built the foundation for pretty much the entire financial system for the last couple hundred years, right? And that's really, really important because it changed the way that we count it. Now, triple entry accounting was actually invented or somebody came up with it in the late 80s. In 1989, I think it was, there was a Japanese researcher. Nobody cared, right? Nobody paid attention. Then in the mid-2000s, somebody said, look, I'm going to take triple entry accounting, and I think that we can combine it with this idea of digital receipts and cryptography, and wrote a white paper about it, et cetera. Again, nobody cared. Then all of a sudden in 2009, Bitcoin's launched triple entry accounting is kind of popularized because it was taking this academic or theoretical, practice of triple entry accounting and applying it, showing people this is how it can be used. And bam, now all of a sudden we've got a $150 billion asset that's been the best performing financial asset over the last decade. And so I think that you're going to see that triple entry accounting applied to a whole bunch of different areas as well. It's just going to take some time for people to understand where the value is and then build those types of things to actually create and capture that value.
Right. And mate, as people speak more about Bitcoin, one of the things that comes up a lot is this idea of speculation and a speculative asset. And some of the reasons for this and some of the arguments put forth are potentially highly serious and valid right now. And some things like, for example, liquidity in terms of real and fake, and the same goes for volume, what's real and fake. Issues of wash trading, manipulation from whales. None of these things, can be understated. They do happen. And then there's minor monopolies, issues right now with the prevalence of margin trading and gambling on the blockchain or in the ecosystem itself, and then shilling groups. So Pomp, these kinds of things are real. Do they concern you in terms of really advocating for the legitimacy of Bitcoin when we know there's also a lot of malactors in the space affecting even Bitcoin?
Yeah, I think that there's bad actors in every market, right? I always say that bad people are going to do bad things regardless of what market they're in. And so if you look at the US dollar, there's $2 trillion a year that's laundered in that currency. If you look at wash trading and all this other stuff, like that stuff happens in every single market, and that's why we know about it. Right. And so literally all that's happening is people are trying to manipulate markets. They're trying to make money, right? All this kind of stuff. And so they're doing it in traditional markets. They see a new market. They understand that the infrastructure is not there yet. The regulations aren't there yet, et cetera. So they just migrate to that new market. That market eventually gets the infrastructure built. Regulation gets cleared up. There's some enforcement, et cetera. Then they're kind of, scattered out of that market and they go find a new one. And so I think that it's actually really encouraging to see those folks come in because one, we know that they'll eventually get kind of kicked out of the industry, right? In terms of the infrastructure will get put in place, KYC, AML, the regulations, all this kind of stuff. But it's showing that there is value. They see value in that. And it goes back to this idea of, if you look at almost every major technology shift in history, well, criminals are some of the first people to use the technology. So who are the first people to use it? Cell phones, beepers, the internet, etc. People doing bad shit, right? And it's because they're constantly playing a cat and mouse game with law enforcement, and so they've got to use new pieces of technology to try to stay ahead. And then law enforcement's got to use that new technology to catch up. And so I think that we're seeing that happen here, and that's just following the trend of technology evolution that we've seen, time and time again.
Right, it makes sense. Now, with regard to, if we go back to money for a moment and forget about, all the other verticals and all the developments that are happening right now, Stefan Livera talks about this idea of monetary maximalism. Now, you're obviously hugely supportive of money, Bitcoin being money and being a leader in sound money for the future. But what about the developments, Pomp, with regard to others trying to establish some sort of currency in utilizing these kinds of technologies? Do you concede that there's any value in any of the other efforts from teams to build similar currencies or valid currencies in this context?
Yeah, again, this goes back to my opinion doesn't matter, right? It's just, what does the market determine? So far, the market's determined that Bitcoin is the most valuable thing that's come out of the industry. It's the most valuable currency, etc. Could that change? Sure, and anything can happen, right? Never say never, but I think that it's really, really hard to unseat that network effect that Bitcoin has, because ultimately it has certain components that I think people realize are really important to money. It's sound money, and so that requires a level of selflessness from the creator, right? The idea that we don't know who created it, with the idea that they didn't take any of the money that they created and liquidate it or any of that kind of stuff. That stuff is all really, really important. And I think that now we're in a position where there's too much scrutiny, right? There's too much attention. It would be really hard for somebody to pseudonymously create a currency, put it out in the world, walk away from it, not monetize it, etc. And so I think that the market's determined that Bitcoin has a lead. But again, I just kind of follow what the market says. I'm not really worried about.
That's surprising you say that. So nothing's set in cement in that sense, Pomp. Now, two things I really want to talk about, and that is scalability and especially liquidity, because it's argued to be one of the core assets right now, especially if you're in the SOV camp or store of value for Bitcoin. How important is it for Bitcoin to have this lead in liquidity right now?
Yeah, I mean, everything's important, right? So the fact that it's a store of value, the fact that it's a medium of exchange, the fact that it has liquidity, the fact that it's highly supported across all of the infrastructure, the fact that it's the most popular from a branding and kind of mindshare standpoint in the press and media, the fact that it is the first thing that most people come into in the industry. All of that stuff is really, really important. I don't think that you can put a quantitative value or score on the importance of one thing over another. I think it all together, makes up what Bitcoin is, and obviously, that's something that's really, really special and something that I think that the world hasn't seen in a long time.
Well, right now we see that liquidity is certainly driving a lot of attention in terms of trading, and so without that, you wouldn't see such a robust ecosystem of traders, interacting and speculating, on Bitcoin's value, for example. But let's talk about censorship resistance, because this is a hot topic right now. A lot of debate when we talk about Tether and stablecoins more generally, because we see right now that there's a great deal of transactions happening on that Tether coin for people for whatever reason that they use it. And then we talk about cash as well in terms of cash censorship resistance. We know that if we use cash, that is relatively censorship resistant too in its cash and hard form. So in that context, is it fair to say that it's not just Bitcoin that has really strong censorship resistance, but possibly Tether or even cash fit in this same category of highly censorship resistant assets?
Yeah, I mean, again, I think that there's elements of censorship resistance. Like, censorship resistance is, if you think of a spectrum, right? There's either censorship resistance or there's things that are getting close to censorship resistance, but there's actually not full resistance. So it's kind of like, let's say that there's 10 ways to censor the movement of money. Well, if I remove 4 of the ways for you to censor me, that still leaves 6 of them. So I'm not censorship resistant. I'm just harder for you to try to censor me, right? And so I think that that's important, because if you take something like cash, super easy to seize, right? I literally just walk up to you and I take it from you. You can't stop me in many cases. And so if you keep it at a bank, I can take it from you, right? And so I think that that's a component of, yes, there is less censorship available to you and I if I just want to hand you cash, but it's not fully censorship resistant in the sense that I can stop you from handing the cash to someone. And so that spectrum is really important. But at the end of the day, I think Bitcoin is showing itself to be the best positioned asset that acts and is money in a censorship resistant needed world, right? We're going to need this because there is a surveillance state that is coming, right? It is pretty obvious, I think, to most people. And if Bitcoin can help people opt out of that, keep their personal liberty, keep their personal freedoms, their privacy, and avoid that censorship, I think it's a really, really important asset for the world.
Right. So what are your thoughts on Tether then, Pomp? Because it's leading the way in terms of transactions. It's certainly something that people, even in developing regions, can use if they want to have, this idea of stability, even though we know it, it has this very opaque, backing or lack of thereof, but still has the semblance of, the value of USD, for want of a better reference. So in that context, what are your thoughts on the predominance of and the dominance of Tether right now?
Yeah, two things. One, I would argue that Tether's got more backing than the US dollar does, right? We know for sure the dollar's not backed by anything. Tether, whether it's 50% backed or 100% backed, it's backed by more than the US dollar. So I think that's one component. And the second is, it frankly doesn't matter, right? Again, my opinion doesn't matter. The market has determined that it's the most valuable stable coin, and people are using it. And so rather than try to pontificate on why that is, I think it's important to understand that that is the leader today and watching to see if that's going to change. And the beauty of crypto is that there's a free market competition between these currencies. And so the best currency is going to win. And the best currency may have different use cases, right? You may need a stable coin for one thing and you want Bitcoin for something else. But at the end of the day, a free market of competition is really, really good because it ends up being a net positive for the users in that marketplace. And I think that's what we're seeing play out in crypto.
Right. And do you think that, given that there is a long-term trajectory, you've mentioned this in this interview, do you think that stablecoins could actually stifle this trajectory for Bitcoin, for example, to continue to iterate and that imperative of time when people are starting to utilize so many stablecoins, not just obviously Tether, for certain monetary needs where they deem that worthy?
No, I think that they're net positive, right? And the reason is I call it the token density theory, which is basically it's very similar to the restaurant problem. If I have a restaurant on an intersection and you're a competitor and you move it across the street, usually you don't take business from me, right? Actually, both of our foot traffic goes up. If a third restaurant, a fourth restaurant, a fifth restaurant all get started on that same intersection, all of the foot traffic goes up because now people think of it as that's the restaurant corner, right? Or that's a restaurant intersection. So let's just go down there and we'll figure out where to eat. And so I think that same thing's happening in crypto. There was only one cryptocurrency. It was Bitcoin, right? And people were like, well, what is Bitcoin? Then there was 2, 3, 5, 10, now 2,000, whatever it is. And people are coming in for all these different reasons. But at the end of the day, it's getting more people digital wallets, it's getting more people familiar and educated on cryptocurrency. And ultimately, I think what it does is it helps Bitcoin become more popular, even if somebody comes in for Tether or some other stablecoin, et cetera. So all of these things are really important, and we should encourage the experimentation and innovation and understand that all boats rise together.
Right. Well, you're much more open to the potential of a lot of this stuff now. I think you've transitioned in many respects, especially when there's a lot more applications, a lot more platforms, a lot more technologies emerging. But Pomp, I've
always believed this stuff. People just don't listen. Everyone thinks that they know me from the internet, but this is what I believe the whole time.
Right. So perhaps you're not a maximalist at all, Pomp, but let's talk about the code, the Bitcoin code for a moment, because removing the idea of Lightning for a moment, because that's an agnostic open source protocol. It's not really directly correlated with Bitcoin code. Now, there's not a lot of ease of access right now for the average developer. It's quite a comprehensive and detailed process to get in and work with the code of Bitcoin. Do you think that's an issue? That it is such a rigorous process just to get in to be part of developing Bitcoin?
Yeah, well, so there's a couple of pieces there. On the development side, it shouldn't be hard, right? There's a lot of money at stake. And so it should be a slow, methodical process. That's part of the security, is the fact that, Joe Blow on the street can't just go and change the Bitcoin code without, going through a pretty rigorous process that ensures whatever is being changed is not going to fuck it up. So
Yeah,
I think that's
I think
really
that's
important.
fair, mate. I think that's entirely fair. But what about in terms of the decentralization aspect and, the narrative that we all value, or many of us do, and that in terms of open source, embodying the idea that we're all, able to contribute. That's a little bit, that's
You can contribute. It's just hard. Being hard and not being possible are two different things, right?
Mm.
And so what ends up happening is you got to be serious about it, right? It's not just for you to go and write some code on a weekend when you're drunk and hope that it gets included. I think that part of the process is it's not impossible for anyone to participate. Anyone can participate, but it being hard is part of the security of it. And then in terms of the user interfaces and Lightning and all this other stuff, the early internet sucked, right? If you go back and you look at the web pages and the products, etc., they were horrendous. It was really, really hard to use. And so I think that over time we saw the user experiences, the user interfaces, the technology, all of that improved to the point where today I got a mobile phone in my pocket and literally a 3-year-old can use it, right? I think the same thing's going to happen here, where you're going to see all of that stuff improve over time. It just takes time.
Right. Well, speaking of developments, what is being built on Bitcoin if we take away Lightning from the equation, because obviously that is a very distinct technology. As I mentioned before, that can be used and applied in other scenarios and in other protocols as well. So specifically to Bitcoin, what is being developed on this so that people can understand that it is programmable as some allege it is?
Bitcoin's being built. The most important thing,
tell us
right?
What? But what's being built on it, though, Pomp?
What do you mean?
Well, at the moment, there's some people suggesting that you can utilize Bitcoin for more than just its use case of money. You can actually build it so that there's other applications. So what outside of Lightning, for example, and the experimentations there, is Bitcoin being built with in the big B sense?
Yeah, I mean, look, we see companies who are building everything from smart contracts on Bitcoin to building DeFi on Bitcoin, et cetera. So it's all the same stuff. I think that the most important thing around Bitcoin, though, is making sure that Bitcoin exists as money, and then everything else will come. And so you see Lightning, you see all of these different applications or networks or kind of various projects that are being built around and on top of. But again, all of that is less important than the fact in 11 years, Bitcoin has gone from non-existent to one of the top 15 most popular currencies in the world. And if people believe that it is money and they use it as money, all of that other infrastructure will get served. Because if you are a software developer, you're going to go build where the liquidity is. You're going to go build where the usage is. And right now that's on Bitcoin.
Right.
All right, last question, and then I got to go.
All right. Well, it's interesting also because you hear influencers, for example, who are prominent in the space talking about the fact that they don't use Bitcoin and don't want to use Bitcoin to spend it. They'll literally say that on their shows. But in terms of privacy, Pomp, there is a dearth of privacy, arguably, with Bitcoin. It's pseudonymous. It certainly, there's iterations built, from this to encourage people to have privacy. What are your thoughts on privacy? Do we need it?
Of course. It's incredibly important. You can use Bitcoin privately. It's kind of like saying, hey, if you get on the internet and you want to expose all your data, you can do that. Or if you want to get on the internet and use it privately, you can do that too. Same thing here is if you want to get on and use Bitcoin, you can do it in an exposed manner with no privacy, or you can get on it and use it in a private manner. It's just you got to know what you're doing.
Right. Well, just before you go, I just wanted to ask you, do you think that there's ever a case for yourself or anybody else that perhaps, suffers from cognitive dissonance? And I mean that respectfully. When we see things that some would argue are coming that could be faster, and I say could be more secure in the sense that Ethereum, there's arguments put forward that are reasonable to suggest that it has at least equal security or potentially more. Other utilities coming forward, better applications. Is it possible, Pomp, that there's just better things coming for the future in the context of applications and even in the context of money?
Better things don't matter. That's the misconception. When it comes to money, the better things don't matter. Right? It's the core components of Bitcoin can't be replicated. And that's the part that I think a lot of technologists haven't wrapped their head around yet. But a currency is not about the technological innovations. It's about the network effect. And when you have a network effect, you can't unseat it.
Right. Well, mate, as always, it's a pleasure to speak with you, and it's a privilege to speak with you. I would love to certainly get down into this a lot more, into the meat of this discussion, but you can't right now. You haven't got time, but hopefully later on, Pomp, we can catch up again and really just start to explore more of what Bitcoin is and what it's becoming and what it's evolving to in the future. But thanks again, mate, for all that you do in the space. A lot of people listen to you, respect your word. But as you said, it's more than just you. At the end of the day, it's about the function, it's about the form, and it's about what Bitcoin actually does to change the financial paradigm.
For sure. Thanks so much. I appreciate you staying up to do this. You guys have a great night.
No worries. Thanks, mate. Take care.